Hi everybody, my name is Adam Meyer. I am back with another video, and yes, this video is going to be about smart money concepts. It's also going to be about ICT. Yes, I need a haircut, and yes, I'm going to get one at the end of this week. So I want to say what's going to happen here on my YouTube channel. You really have to let me know what you think. I want to do more short-term analysis and reviews on the channel. Also, I want people to join my Discord if they really like these short-term concepts as well, so I can help other people, because it's all about creating value. And also, I want to stick with the long-term analysis, because right now I do like long-term analysis and fundamental analysis of like what's going on in the world. It's all about investing, but short-term trading and analysis is what I'm learning personally from ICT and using his concepts this year. I've actually been trading for 3 years now. And last year I started really diving into ICT, and same with this year. I'm really going into ICT this year as well, but forming everything into my own and help explain it to people. I want to create value through YouTube and also through my group chat, which I host weekly calls in. I'll talk about that in a little bit when I'm talking about the charts. But let me know what you think. Leave a like if you really like it. If you don't, do whatever, do what you got to do. But let me know what you think. All right, let's get into the video here. All right, we're going to get into the chart right here, and this is the ESH 2023, so this is the S&P E-mini futures. We are on the March contract right now, and if you need or have any questions throughout this entire video, please reach out to me either privately in the comments, or if you want to join my Discord, you can do that. That's where we do our Zoom calls every single Wednesday at like 8:15. We do a Zoom call for about 30 minutes or so. Sometimes we go a little bit longer, but if you want to join that, let me know. And that's where we do like live analysis, live trading, and explain some things. So if you want to do that, let me know. Anyways, we're going to go into here. These are all ICT concepts. So if you want to learn these concepts as well, if you want to go study ICT, go for him. He can be very, very confusing. At first, I really and highly respect him, but I can understand that he is hard to listen to time to time. But I'm going to say a lot of comments you might not understand, so if you want to watch this a few times, go ahead. If you don't understand it all right away, it's okay. Do what you got to do. But these are all going to be about smart money concepts and day trading, and it can also be incorporated within swing trading and also long-term trading as well for position holding. All right, so we're going to use these comments. You might see on my chart, what are all these things? We got the NWOG and the NDOG. Keep these in mind. I'm going to refer to these a lot. NWOG is the lighter blue. The NDOG is the darker blue, as you can tell. Oops, I just moved it. And the NWOG is the new week opening gap. That's what it stands for. The NDOG is the new day opening gap. The new day opening gap is the hour gap between 5 p.m. Eastern and 6 p.m. It's where the market is not open. That's the 1 hour every single week it's not open for the futures market. And that's going to act as support and resistance. The NWOG is when it closes on Friday and it opens up on Sunday. So that's the NWOG. And I have these marked up. The NDOG I usually do the previous day. That's it. And the NWOG, that's the NDOG. The NWOG I use the last 5 days. Like, keep in mind, I learned all this from ICT. It's not my concepts. I mean, I just think I can teach it well enough for certain people to understand. But if there's anything I need improvement on, let me know. Anyways, I have this one marked up down here. It's more than the last 5 weeks of the NWOG, but if this could act as a magnet if price does show more order flow and willingness to go lower. So I have that down there as well. I want to keep that in mind. So we order flow on the way down. We are bouncing off the NWOG. We're filling in a fair value gap that's also in here. So we came up to a premium and we came down. This could have acted as a discount, or it could have bounced off here to trade up, but we closed very bearish. The smart money showed their hand with this one massive leg down. The massive leg down, I wanted to see if we can get down below this low and also down below this low today. And what are we doing? We are always targeting money and liquidity. So the market's always trying to take money and liquidity. So liquidity is where there's stop losses and buy stop orders in an area. And that is where money is sitting, or it's trying to rebalance itself, which is when it moves fast. Like this, a massive gap in the candle. You see it from this wick to this wick. So if you want to follow me here, if you don't know what a fair value gap is, that's what you're looking at. It takes 3 candles, left, middle, right. And there's a gap there. There's no buyers that came in. This retraced in, filled in the gap, so it rebalanced the market. Market's either trying to rebalance or take liquidity. Those are 2 things. Rebalance or take liquidity. Write that down. Rebalance or take liquidity. Rebalance is a fair value gap or inefficiencies, same kind of thing, or take liquidity, which is down here, below these lows and above these highs. Okay, I didn't know if it wanted to come here or come down here. I don't know. That's the whole thing with trading. You got to wait for it to show its hand, and then you can enter based upon that. All right, now we're going to go down into lower time frame charts so we can see what actually happened today. And let's see. I got on the charts around 8 a.m., which were right here when I got back from the gym. So I was at the gym. I noticed the price was just working its way higher. I wanted to see if we're going to continue to bounce off here. I looked at my phone when I was working out, or if it's going to bounce off here and go hit these equal highs because that was liquidity up there, or we're going to start breaking down into here, accumulate here, and maybe continue higher, or we're going to drop lower. So after this massive leg down, we could then basically conclude that we wanted to keep going lower. So where are our sell side targets? We have here, and we also have here right there. And now we can go down to the lower time frames, which we have those liquidity points marked up. We can see that we came up into the NWOG, new week opening gap, keep that in mind. And then we have the NDOG here, which is the new day opening gap. So we trade up in, and we start to see price reject off that area within here. And notice it. You go down to the 1 minute chart right here. You gotta realize this is like algorithmic terms of what's happening. Comes up higher, taps it to the point, comes down, closes to the point of the new week opening gap. Go mark it up on your own charts. You'll be able to see it. Notice how we closed here on Friday. You'll go to the bottom of the screen where it says Friday 24, 2023. And then you look right here where it says Sunday 26, 2023. So it closed here and it opened here. So we're gonna mark up that entire gap right there. You could even throw some fib levels on it like this from the open to the close. You can even mark it up within quarter levels. I mean, I'm getting a little advanced here, but you're going to use these levels and divide them up because in algorithmic terms, when price retrades back to it, even though that was a while ago, when price retrades back to it, it's going to act as a form of support and resistance in algorithmic terms. You can go over here. I'm going to backspace this. I'm going to go down to a 10-second time frame. And notice how price is respecting the closes, the retests, the closes of the 50%, the 75%, the one, like the full, like the 100% there. It's coming back down, respecting the bottom of this, respecting here, respecting here. Anyways, if you don't want to believe anything, that's just look at that. That's algorithmic. But anyways, you got to keep that in mind. We're using that as a resistance level for in algorithmic terms. So we got to keep that in mind. I'm going to mark up and show all the possible trades that could have happened here today and what my favorite one is. So we'll get to that in a minute. We started to buy up right before the news at 10 a.m. We had 10 a.m. news, so we do not trade before the news. I'm on the charts at 8, and then there's news at 10. I don't want to trade before 10. We could have taken a short within here where it came up, retested, dropped down, and had this breaker right here. There's a breaker block right here. Boom. If you don't know what that is, look that up with ICT or even myself. Reach out to me. Tested right there. Starts to trade lower, 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 lower. Consolidates. Rips right back up for this Judas swing. Trades back down after the news. Creates these equal lows. Has this low here. We have this low in mind. So keep all of that in mind. We start to break lower. We break below the NDOG, which is this shaded box. Go back to the beginning of the video if you don't know what I was talking about there. But we have this shaded box. It starts to trade lower. This is where I like to enter. Right here, when it starts to retest the shaded box. Go here to the 30-second time frame. This is where I like to enter. Closed, retested the shaded box. I was like, okay, this thing's ready to go down. Another entry here. Boom. Volume imbalance right there. Where this wick got up into. I'm like, okay, this thing's ready to come down. Right here. Boom. Comes down and it rejects right from this low because that's where the liquidity is. From this low right here. That's what that purple line is. So we got that in mind right there. So boom. I closed 90% of my trade right there and I was done. And then I was like, okay, I was on the Zoom with my group and the trade came down some more. Done. Like I didn't hold that. I was like, oh guys, I missed out on a little more of it, but that's okay. Completely fine with it. Managed my emotions, whatever. It is what it is. At least I took money out of the market. You know what I'm saying? All right, so price did trade back down into here and it started to accumulate. And then we have a macro kick in, and the macro kicks in from 10.50 to 11.10. And that macro, I wanted to look for buys up above these highs in here. But, sorry, that was my alarm. But I was like looking for buys within here, and also we were within this order block that was sitting up within here. I'm going to go down to this 5-minute time frame here, and this up candle that came up into there. We were in bearish order flow, and I was seeing if we could get retest within here, get a nice rejection, and after that rejection within this 5-minute gap, it was also a nice 15-minute gap as well over here. But after this rejection here, well, that 15-minute gap actually didn't present until after this candle closed right there and this candle opened. But anyways, that retested right there. I wanted to see it continue up, take out this high, and come up above these highs here. But this order block really wanted to hold in with that area. So we're going to go down to the 2-minute time frame and see what happened. So we're sitting here at the end dog, and we did trade that up here, and we started to reject that area. So overall, that was not a great buy. So it shifted down here, and it started to retest these volume imbalances after this market structure shift. So it failed to break higher here, shifted lower. So being patient, if you were patient and it shifted lower and you really wanted to wait. So the ideal buy, if this was the buy up to here, it would have shifted up here and then held up above the end dog and then retested and went up and hit this high here. But instead, it dropped lower and then started to retest this volume imbalance. This might seem like a lot, but it's really not if you really think about it. Our clear targets are these equal lows down here and also this low down here. And what happened, price traded down. I also printed off these charts, by the way. Over here, let me find them. Oh, they're right here in front of me. Printed off all these charts right here, by the way. So you print these off, and I write down notes on them to see like what happened throughout the day. Anyways, we got this gap that's sitting right here. We come up and we start retesting it. Why do I pick this gap? Because it's a massive drop. This candle showed its hand, and this was the one really driving for the liquidity. It's a big open gap that is going to act as a support and resistance on algorithmic terms. When it retrades back to it, you can look through candles. It doesn't just have to be right there. But anyways, comes down, drops down, starts to retest there. That could have been another entry. But since I had my win and I had a small loss because I took a buy right here, I was like, I'm sitting out. I'm completely fine with that. I was done, completely done. It's fine. Anyways, price trades down, takes out this higher time frame low that we were sitting at. Let's go here to the 1 hour, this higher time frame low. And now it's time for consolidation. That's all I want to see. It's a consolidation. And then, well, not consolidate necessarily, I got lunch time frame. So after that low was taken, I was done for lunch. Price trades up into here, trades back down, and then I ended up taking buys to come up into this high, but I'll get to that in a minute. Trades down, shifts structure, comes up and rejects. And the second leg here, so this could have rejected here and continued higher, but this leg down, this 5-minute candle, clear indication that price wants to continue lower into this gap that's down here that I actually marked it up into my group chat for people to keep their eye on. Now I'll show you another trade that could have been taken if you're really focused in on this, where price trades up, trades down, go down to the 1-minute time frame, see it trades down, shift in market structure, comes up, hits this volume imbalance. It's sitting right here. See this gap in price, volume imbalance, could have entered here, could have entered there. Price trades down even farther, and we have that gap that was in mind that I was showing you here just on the 5-minute. We stopped right short of it, right down below that low. So let's go over here. Let's create this gap from here to here. Why this gap? Because it's the gap below here, and it's an open gap that we can reach down into that's below this point. So now we reach back up in, we take out this high, and we come into this area in here, we take out this high, trade down, trade back up. This is nothing I'd want to actually take, honestly. I wouldn't want to take any of this. If anything, I'd want to take it right here if I was completely focused, but I'll tell you right now, I was not completely focused, so I did not take this short right here, but this, we were just watching and observing price, and price trades down, takes this gap, fills in this gap right here, then it trades down below, comes down, buys up, consolidates here, has a volume imbalance there, you could buy it. We're at the 3 a.m. time, like right, not 3 a.m., 3 p.m. time. So that's when the last hour kicks in. We shift up, we shift up, we shift up. I like entries within here, this down candle, but we have to keep in mind that this low can hold. You go to a 5-minute time frame, we have to keep this in mind as well, that we have an order block that's right here on the 5-minute time frame, this down close candle. and we also have breakers. And I can even show ICT's chart in a little bit, but this breaker right here, this nice up close candle, acts as a breaker, and we want to see that breaker hold and not really broken down below. So this breaker here, we come down, we test it again, we break up, and then we come into here. You can enter within here. This is something that you got to keep in mind. We have a volume imbalance right here as well on the 2-minute time frame. We have this breaker that's all right here, and this breaker is what we're going to keep our eye on. And we also have this order block. All these down close candles in order block. This order block here should hold down below all these lows. It just came up, comes down for a retest. You can really get in your emotions with this one, because sticking to the higher time frame will really keep your emotions out of it. Stick to the 5-minute. When you know your bias is bullish, when you have these equal highs sitting up within here, these equal highs, this equal high, we have our 1 hour fair value gap. I can even show you here on my chart that I printed out. Let me get it real quick. Boom, boom, boom. Where is it? Where is it? Where is it? It's 1 hour fair value gap. I have it marked up here in blue. So that's a 1 hour fair value gap right there, marked up, and I'll mark it up here in blue as well. From here to here, we're looking for price to reach up into that area. So that's our target. That's where we're seeing it go. We see price staircase its way down, staircase, 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 staircase. We could hit this low, but after this market structure shift, we are bullish. We just traded back down into this 5-minute gap, into this order block, into the volume imbalances, and we start to shift up again. We can enter more within this retracement, and also when it starts to show bullishness again, within this 1-minute gap that's sitting right here as well. I know I'm getting pretty technical with this. There's a lot to it, but let me know if you guys like these videos, if you want to rewatch more. There's a lot to it. I could probably explain it a little slower and do other videos on this, but we see this gap here, we break up into it, and we start to retest it, and that's what we want to see. Starts to break up higher, we're hitting this area. Our stop loss is down below this low here, and we're just continuing to watch price and have our eyes up here above this area, and also into that area up here. So like I said, the market is always trying to take liquidity or rebalance itself. And in this case, it took liquidity 1, 2, 3, 4, rebalanced this area here, and then it came up to this area that needs to be rebalanced. So it took liquidity and rebalanced itself at the same time within the last hour of trading. So the lunch macro runs from 315 to 345, and that's what you're going to want to see here within this deep retracement and price trading back up. Go to the higher time frame so you don't get scrambled out, and there you go. Boom, just something like that, and that's it for the day. All right, everybody, I'm gonna wrap this video up here. Let me know if you want to see more of these things by leaving a like or even a comment. So let me know, because otherwise I'm gonna go stick with the long-term analysis kind of things with the fundamentals, or even like the swing trading kind of things. Or if you just want me to do like a mix of both, and you decide if you want to watch whatever you want to watch. But let me know. Love you guys. Take it easy. Bye.